We detected an unusual trade worth $3.4 million on Fortinet stock, ticker symbol FTNT. But here's what makes this even more interesting. Fortinet is scheduled to report earnings in a few days on August 6th. And so in this video, we'll analyze this unusual option activity to find out if this wealthy investor is bullish and buying or bearish and selling. Because as we all know, the rich have more access to exclusive research and information, including leaked insider information such as earnings reports, to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, without further ado, let's dive into our analysis so that our subscribers and members can profit from this deep knowledge too. Now, before we get into the data of unusual option activity, take a look at this chart here. We are currently trading right where it found support after this previous earnings drop. And so this time is quite different now because we're not dropping to this level after earnings. We're actually dropping here before earnings. So keep that in mind. Now let's take a look at the data for unusual option activity on the options time and sales tape. We can see here on August 1st at 1:49 p.m. at the 20-second mark, these September 19 options at the 95 strike puts were being traded 7,000 contracts for a price of $4.95 each. Keep in mind, this shows options prices, and so to get the dollar value, we either multiply by 100 or simply move the decimal 2 places to the right. That means each contract costs $495. And since there's a total of 7,000 contracts, we multiply that out and we get a total trade cost of $3.4 million. But keep in mind, the earnings report is coming up soon. And so this is a higher risk trade in comparison to the trades that we shared on our website. If you want access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link at the top here where you can see exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this is higher risk, we still took it, but we used position sizing to manage our risk. As you can see here on the option chain for the September 19 options at the 95 strike puts, our position is here marked as POS. The green color indicates a buy position. And notice there's 12,000 contracts that were traded, spiking the volume up. Clearly, these are new opening trades since the open interest was much less at only 975 open contracts before these unusual trades were made. This data is very important to figure out because if a wealthy investor is closing out trades, it could mean they're worried about that stock. And so maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening new contracts, like in this case, it could signal an opportunity for us to start a new trade. We always take this extra step to verify this data because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. And in this case, we confirmed this data, and that is why we entered this trade along with this wealthy investor who bought these 95 strike puts for $4.95 each, as we saw earlier on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the profit or loss is represented here on the y-axis, and note the zero break-even line over here. And so if the stock goes up, this trade becomes more negative, more loss. And if the stock goes down, this trade becomes more positive, more profitable, because this is a short bearish trade, and we can confirm it on the options Greek. This trade has a negative delta. If it was a long bullish trade, it would have a positive delta. But keep in mind the risk with this trade. It has a negative theta, which means as time goes on, this trade loses value due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration day. And that is why the break even on this trade moves lower as time goes on. And so you can see the break even on this trade is at $90 per share, which means that even though we bought these put options at the 95 strike puts, the stock needs to drop below $90 per share for this trade to be profitable at expiration. And because of this added risk, along with other factors including earnings, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on the lower risk, higher probability of profit trades, the kind of trades we share on our website. If you want to get access to those, we'll put a link to our website at the top here. Let us know in the comments. Do you think Fortinet stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.